Hello traders, Gary Wagner just after 12 o'clock in Honolulu, 5 o'clock in New York, Monday, November the 2nd, and we're looking at the Dow Jones Industrial Average staging a nice, strong rally on the day, up about 165 points, about a percentage gain in terms of this average, and this coming after we had quite a sell-off in the Asian markets and China specifically. What that is saying fundamentally is that although there is a interrelationship between all of these markets, the United States market, the U.S. equities markets, leads the way and can still perform in a strong and robust manner, given that the Chinese market might be under some pressure. And that is an interesting correlation that we are noting on the day. As I said, we've got about a percentage gain on the Dow Jones Industrial Average, and that takes us to our current position in the market, which is where we are long our Standard & Poor's vis-a-vis the mini contract. We are long roughly at 2068. Market closed up almost 20 points higher, a percent higher at 2093. Now, this morning I did send out a special trade alert, and what we looked at on that trade alert was to simply move our stops up, and they were sitting at 2050. As I said, our entry point is 2068, and I moved it up to about 2060. The reason being is when we looked at how the market traded going into the open, realized that the futures, the S&P futures, will trade after the close of the market, just prior to the open of the market. It's off of Globex, and it in essence is a 24-hour market. We saw a little bit of weakness coming into the market, but we found some real support in this area being about 2062, 2063. So my sense was that we should raise this up just a little bit, and from there, we are now not locking in any profits yet because we're in at 68, but we are conserving the equity should the market begin to sell off. I'm not anticipating that. However, we have to look at the fact that we are now, in terms of where the market is, roughed up against that 2100. And we know the 2100 in terms of the overall breadth of the market has been a resistance area prior to this market falling out of bed in August and then moving back up. And let me show you what I mean. So traders, all I've really done is compressed this chart so we could take in that timeline. Of course, this is the August meltdown in which we saw this market drop. And right here, you can see that 2060 was a real critical support level, because once it dropped right in this area, we had this market trade dramatically lower, trading down to just above 1840, and that was a significant drop in the market. Of course, since then, we've seen a dynamic rally, but let's take a look at some of the most recent tops. We do have historical tops at 2120. That's, without a question of a doubt, the highest that the S&Ps have ever been during the lifetime of its trading, the contract itself. However, just below that, we've got a series of tops, and those come in roughly at 2100. You can see these tops right in here. They would tend to peak just a little bit above, and this is when we had the market trading in a defined trading range, a narrow trading range, in which we saw real resistance at 2100 and real support at 2060. So the question that we have to ask ourselves is, now that we are really at the footsteps of trading to or above that point, you can see it did trade to that point but closed effectively 7 points off of there. If in fact we'll go into either a consolidation in which we'll trade within this range, or will we see this market break above this price point to actually go and see if it can take out these all-time highs. Historically speaking, when we look at October's performance, the years that October had outstanding performance, 78% of the time that you saw October producing really strong performances, 78% of the time you saw November and December be follow-through months in which we had a robust market, in which we saw this market moving to higher grounds. That's only historically speaking, so that's one feather in the cap of that bullish camp that believes we'll move above this. In either case, we want to protect profits. Should we see it come down, we'll quickly raise that stop. You can also look to do that at the same time. But more importantly, traders, we're in at 68, market's at 93. We've got good profits, but we want to be cautious and we want to be careful in this area just because on a historical level, we've seen this market come to this particular price point and then trade sideways for quite some time. That, of course, was just prior to the drop. We'll have to see how this all unfolds in this and December as we go into the conclusion of the year. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.